Madam Chair. Hello, everyone. I'm so glad that we're having this hearing. I'm super appreciative of the leadership of our chairwoman, of at least having some sort of transparency on exactly what happened. As we all know, the wealthiest 10% own 84% of all stocks. In fact, 50% of American families own no stock at all. I say this to emphasize that to many of my residents, the stock market is simply a casino for the rich whose gambling hurts pension and retirement funds. And when you all screw up, the people end up paying the tab through losses or bailouts. So I want to talk about the high frequency trading. We know about half of all stock trading in the US is done by computers. They analyze market activity and instantly complete trades at a profit. So this high frequency trading allows Wall Street traders to get ahead of transactions done by pension accounts and retirement funds. So Mr. Griffin, and this truly is a yes or no question, is Citadel's trading algorithm programmed to identify and trade ahead of large trades done by pension and retirement funds? Yes or no?
Congresswoman, today, virtually all trades executed by institutional investors are in the form of program trades such as VWAP and other algorithmic trades.
So that's a yes, right, Mr. Griffin? Just
no,
so it's
I'm answering the question. It's a very complex question that deserves an appropriate level of answer.
okay.
These VWAP trades are not large trades that you can, it's not like there's 10 million shares about to be bought. It is a trade that is sliced into small slices, 100 or 200 shares, and executed over the course of a day, a week, or a month.
Well, help me out with this one. Does this increase cost, this kind of algorithm or whatever program to identify and trade, you know, the computers doing the trading, does this increase cost for people who have pension and retirement funds, yes or no?
So given that we, for example, manage money on behalf of pension.
Oh, well, I really, because they're so timed, this is not out of disrespect. We just got a limited time.
We use VWAP orders to execute on behalf of our hedge fund and have generated exceptional returns for pension plans and for endowments. So
well, I'm going to help you out. I'm going to help you out, Mr. Griffin. In effect, some estimates indicate that as a result of the high frequency trading, though, pension and retirement accounts pay nearly $5 billion in a tax. This means that Wall Street firms like yours engaging in high frequency trades are actually making money at the expense of my residents' retirement funds. So one way to ensure that this enormous wealth generated on Wall Street actually reaches the real economy, y'all, you know, what's happening right here in our communities and in my district, is to enact and look at proposals like a financial transaction tax. And let me tell you, according to recent polling, the majority of Americans, all of you need to hear this, and it's going to grow, the majority of Americans support taxing Wall Street transactions. Taxing them at just 0.1% would actually raise $800 billion over 10 years, which could fund programs like helping my district expand healthcare, nutrition, public education. I heard my friend from Texas, who we all are praying all the families will be taken care of, talk about access to water and electricity. But guess what? Right now in my community, it's so poor that I have families melting snow so they can flush their toilets because they have no access to water. So this tax to me would discourage risky and high frequency trading, unfair high frequency trading. Mr. Griffin, does Citadel's lobbyist right now been hired to oppose federal proposals to financial transaction tax because it would make high frequency trading less profitable?
So we firmly believe that a transaction tax will injure Americans hoping to save for retirement. Yeah. I believe that Vanguard has publicly come out and said that we'd have to work about 2.5 years.
Well, I want to make this,
I'd like to finish my answer. I think it's important.
Oh, no. I'm reclaiming my time. The Hong Kong stock market, Mr. Griffin, imposes 0.2% tax on transactions as a result and sees little high frequency trading. But this hasn't stopped the Hong Kong stock market from thriving or becoming the third largest in the world after New York and London. So just to be clear, let's not gaslight the American people. Y'all be fine with the tax. And it's fair because let me tell you, our folks are tired of bailing you all out when you screw up and gamble with the retirement fund. And that's exactly what happens every single moment. And that's the reason why we're having this hearing, is that sometimes you are irresponsible and it's set up in a way that helps only the wealthy and leaves people like my community here with this large income inequality that I feel like never ever gets the bailout it deserves. Thank you so much. I yield.